What's going on, guys? Emmanuel right here. Welcome to EMA Forex YouTube educational channel. So in today's video, we're going to be talking about something very exciting, something every trader needs to have, and that is a trading plan. So what's a trading plan essentially? Now, a trading plan is like a drafted document which you're going to create custom to how you approach the forex market. This document is more like your guide, your blueprints to how you want to engage the market, and this is going to help put you in check when the market is not presenting your kind of build up. Now, a trading plan, it's also very vital because depending on your intentions to trading, it's going to help you optimize your performance essentially. Now we're going to be looking at all of the components that you need to build a trading plan. There is no one way to build a trading plan, and your trading plan is something that will evolve over time as well. But I'm going to talk about the major components, the things that are very important while you're trying to formulate your trading plan. So if you're new to the YouTube channel, subscribe to our content, like our videos as well, so that it will help the channel to grow, and we'll get to drop more educational content like this, and we'll grow together in the trading space. So let's get down to the video. All right, guys, so first things first, you need enough data to work with. Data is very, very important. But now, what do I mean by data? You need to have been in the market for some time, taking a good amount of trades, combination of good trades, bad trades, average trades, all of it. They're very, very important. Now, as a beginner, this should not be your priority to build your trading plan. This should not be your focus because you don't have enough data to work with. So this is for those who have been trading for maybe a year or a significant amount of time and you've taken loads of trades. Now, the number one key vital thing in your trading plan is to clearly state why you're trading. You need to answer that question, and only you can do that. So are you trading for the long term? Are you trading just for the time being? Or are you trading because the current job you're currently working at is not what you see yourself doing for a long time? You need to describe this because this is going to be a very vital component that will determine how your trading plan will look like. So once you've done this here, you need to sign in on that trading plan. Put in your name, the date, the signature. Very, very important. I have mine in this format. So once you've done that, what we need to do now is you need to take out your time to look back on how your day usually goes. Like, how is your routine on a normal day? Are you the kind of person that usually trades during the daytime? Do you trade London session actively on your session, or do you trade in the nights from your own time zone? It's relative to where you are watching this from. That's very important. Why? Because if you are a day trader, best bet is you be up and active during the day, and you need to know the currency pairs you'll be working with. You don't want to be working with a currency pair that is not volatile at that time of the day. Okay, now once you've done this, you need to have in mind that your trading plan will be something that will evolve over time, or you could possibly have one or two trading plan. The way your trading is currently is going to change over time, and you need to have a plan for it that will help you know when things are changing. Now, the market usually have different cycles. There's when the market is ranging, there's when the market is trending, and all of that. So you need to describe the kind of trader you are. If you're a person that trades with the ICT concept, you're scalping with it, or you're day trading with it, or you're swing trading, whichever one, you need to put that into writing. Now, different things will be required in different market conditions. For a ranging market, your usual support and resistance will be very effective. Why? Because the market is trapped within a range. Okay, so it's going to be different a scenario versus when the market is trending. So for a market condition that is ranging, you will know that you'll be working with, if you're the type that trades with indicator, RSI, and all of that, jot that down. If you're somebody who trades a trending market, you will need your trend lines, which are dynamic support and resistance, and you need to use Fibonacci's as well. You need to also describe the Fibonacci retracement, the depth. Is it the 618 level? Is it the 716? All of those things, you describe them. Why? Because once you have this clearly described and putting down into your documents, it's going to help remind you that, okay, when we're in this market condition and you know this is what you're going to be working with, you fall back to your trading plan to help you be in the moment. And if the market is not presenting what you're familiar with, you fall back. Now the next thing we want to look at is time frames. Now if you're a scalper, by default you'll be working with small time frames, like your 1 minute, 5 minutes, 15, 30 minutes, 1 hour. These are the time frames you'll be working with, and you need to master the art of synchronizing those time frames. I call this multi-time frame analysis. So that's being able to interact with different time frames and get the story. Next up, you need to itemize your entry types. So like I explained earlier, different market condition requires different approach. Now you might have maybe 4 types of entry or 3, depending on your number of entries. You need to describe them, and also the confluence that will stack up to give you that kind of entry. You describe them as well. It's very important so that you will be very familiar with your kind of entry. If you have screenshots, you put them on your documents if you're doing the Word document format. If you're doing it on a pen and paper, draw it, try and describe it, be very specific, describe everything in between. So next up, we want to look at is your risk to reward ratio. Now your risk to reward ratio should be between 1:2 all the way up. That should be a bare minimum, which means for a trade setup you're risking $100, you should be looking to get $200 at the end of the day, and as high as it could. Okay, so you need to clearly describe this, and this will also help you grade your setups. Now in grading your setups, you need to describe how your high probability setup will look like. For me, my setups are broken into 3 tiers. Number 1, high probability setup. The second is average, and the third one is the low probability setup or the poor setup. So depending on the build up of this setup or how the price action lines up, that should tell you that, okay, my risk to reward ratio should increase, or the volume I'm about to take on that trade should be higher than usual, or you tune it down. It's very, very important. Now the other thing I want to take a look at is journaling. Journaling is very, very key to all of these things. It's the journaling that will help you to be able to optimize your trading plan over time. So as you keep trading, you have more data and you want to filter out from those data. So like I said earlier, you might have 2 trading plan or just 1, but the key thing there is for you to have an open mind and to be able to adjust a few things as you continue to evolve within the trading space. The forex market is always moving and it evolves over time, but you will not be able to identify these changes if you don't have a journal that will record your activities and also a trading plan to put you in check. It's very important. So in the next video, we're going to be talking about journaling and how to keep stats of your trading activity, because this will help you to optimize your performance in the market. The trading plan is your formation, your guide that will help you do the most when the market is presenting those opportunity and fall back when it's not there. So guys, if you find this video helpful, share with your friends. If you have questions, drop your questions in the comment section. Let me know your thoughts, guys, and I will see you on the next one. Keep it simple.